Good morning, everybody. It's Richard Miller here, and today I'd just like to do a quick update on the Ichimoku cloud chart performance of the S&P 500. I've got the 4-hour Ichimoku cloud on the chart, and we can see we had a couple of days ago the market just sliced right through the top end cloud chart as well as the bottom end front cloud support level, and then tried to rebound from the bottom end of this old cloud chart level of 3292 and subsequently dipped below that level as well. We now have a cluster of support in and around the old September lows, and if we look at this support comes from just draw another line there, this top end cloud level here. You can see that old cloud support level there. That's a critical level to watch out for, as well as the top end of these levels here. You can see there's a standard line and the turning line of the cloud. These levels are also a key support level, as well as these highs here. So there's another support level to watch out for. So it will be interesting to see if the market's going to rebound from these levels here. Let me just draw those lines in there. It's going to be interesting to see if the S&P is going to rebound from these levels. We are now in a bear market outlook. Price action below the cloud is bearish, and we're looking for potential swing trades from these support levels if support comes back into the market. Now, these are counter trend because we are overall bearish now because price action is below the 4-hour cloud chart, and that's overall a bearish picture. Nevertheless, these levels are key levels to watch out for potential rebound. It's this whole cluster of September lows, so we could see a lot of back and forth fighting in around these levels, and then an ultimate support level back down here at 3220. So we might briefly test these levels. So this is within a support zone. It's going to be difficult to swing trade from these levels depending on where the market's going to finally find support and rebound from. The other big down level is this level here, 3140, but I'm not sure if we'll get there before the election. The election will probably bring some form of a relief rally, and then we are in this rebound zone between this 3270 level and the bottom end here at 3221. So these are all potential rebound zone levels. So the swing trade is from a rebound trade back up to the bottom end of the cloud, because that's now the new resistance zone is 3380. That's the new resistance zone, the bottom end of the cloud. So that's the trade on a 4-hour basis. Now, if we look at the daily, just to get a slightly bigger perspective, we can see the market is now back below the cloud. So bearish outlook from a Ichimoku cloud chart perspective. Any price action below the cloud is overall bearish. The front end of the cloud's twisted to the downside, so we could see this could be a start of a new downtrend over the medium term. There will be shorter term relief rallies back up to the bottom end of the cloud now. So these are contrarian plays, counter trend plays. When you trade these from these rebounds. Levels to watch out for on the daily chart is obviously these lows here, and then this horizontal line there. That cloud chart level can also be a significant support level, and will be interesting to see if we're going to regain support at that level. 3296 or 3292. Snap back down there should indicate some form of support coming in, but the market's expected to close this gap in the next couple of weeks, and so these are bear market rallies now underneath the cloud. So any swing trades are rebound potential in and around these levels, and then resistance is now the bottom in the cloud, so this is a new resistance zone. 3,400 is now the new resistance zone, but depending on how the election is going to pan out, we should see a relief rally back up to those cloud chart levels. But downside risk on the daily back down to these September lows here of 3220, and it will be interesting to see if the market can manage to find support at these old highs of the September month for a possible swing trade back up to the bottom end of the cloud. It's a critical juncture ahead for the market. If we then go and look at the weekly, can see the weekly front end of the cloud here, that 3280, 3285 is significant support level. If we don't rebound from these levels, we're going to dip back down to these 3,200 level, and then this standard line baseline of the cloud is the next level at 3,172. So these are the downside risk levels. Currently, it's testing the front end of the cloud for support on a weekly basis. So there might be potential swing trades similar to this type candle, what we want to look for within this range for a swing trade back up. So watch out for that. Just to recap the daily, possible swing trade opportunity in and around this zone. This is a support zone. Will be interesting to see if the market's going to rebound from these levels. And then on the 4-hour chart, we can see we're very close to the bottom end of the September lows and the September support zone. So potential swing trade, but we are catching a falling knife here if you want to go long, a swing trade back up to the bottom in the cloud, but there is further downside risk to these bottom September lows here. And this low here at 3,220. So there's about another 70 point possible downside risk if support does not come back into the market at these levels. We can see this range, the high here and the low here, gives you somewhat of an idea as to where the support levels, support zone is on a 4-hour chart. Until next time, happy cloud chart trading.